Feroz Aziz, the Deputy CEO at Anand Rathi Wealth. Feroz, lovely to have you here. I'm out of the studio today. Good to chat with you. We are seeing good gains coming in on the Wall Street. Of course, the reforms rush that was announced over the weekend, boding well. We have the S&P upgrade as well that I was alluding to just before you joined. So lots of good news, and that seems to be offsetting whatever negative sentiment would have been there around tariffs. Your thoughts?
Yes. See, if I look at what's been happening over the last some time, there has been a lot of pressure from the global political system and also from the tariff war. But I think what has happened is there's a lot of FI shorting which has happened. Some degree of good news will give an impetus to the market to bounce back like a spring. There's 92% short. So coming back to your pointed question, the GST reform will have a large impact. But I think what it will do to capital markets is not in the short term is to give a clear short squeeze. The short squeeze was being awaited. Every time someone asked me over the last couple of months, I've always said that the short squeeze will come back from the bad news, the similar bad news of the tariff not being as dramatic as it has been made to believe. That's point one. And second, I think we've got some degree of Independence Day gift in terms of GST reforms. So that's why you see about a 300 points move. And if the short squeeze begins, then there are three leg of short squeezes which will happen. That's the index futures short squeeze. Then you have the options short squeeze. You will have the synthetic futures which will push the market up. I'm reasonably positive that even in the short term, we should be able to inch back to the 2024 levels of September and reach there.
Couldn't really catch the last part of your answer, some audio issue there. But, would you spruce up your FY27 target for the Nifty now, given the fact that we've seen some bit of up move today on the back of the good news that was announced over the weekend?
Yeah, see, I think definitely we had anyways a target which was hard to believe just about 15, 20 days back, which was about 27,800 kind of levels for March 31st of this financial year. So that's the target we will retain. The probability of that happening has gone up dramatically. That's point one. Point two, I think, of course, give or take, these targets are not sacrosanct. But if you try and
Hmm.
look at what the fundamental values of Nifty are, if Nifty earned about 11% growth on earnings last year, of course, if you ask someone, they would say 6.5% is the earning growth, but 6.5% was not the earnings growth last year. There were four changes in Nifty. If you replace back those four changes, Nifty grew by about 11%. So if you've gone through a 10 months price correction, you've got through a time correction of about 7 8 months, 10 months, you've got 6 7% of price correction. That's point two. Point three, you have almost about 11% of earnings. So coming back to what our targets for this fiscal are, I would retain the 27,500, 28,000 kind of targets on Nifties. I think the broader market, which has been beaten down over this calendar year, should also show some respite. Last year, NSE Small Cap 250, everyone told you that the earnings have not grown, but the earnings grew by 18%. There were 63 changes in NSE Small Cap 250 is why the earnings show as minus 9%, but NSE Small Cap 250's earnings are not minus 9. If you replace back those 63 changes, it is actually plus 18%. This quarter, the quarter which went by, the small caps have not done beautifully in terms of earnings. But I think still the broader market will also show some resistance in this kind of price correction and time correction, which is behind us.
Hmm. So what's the play now? Should one stick to large caps or should one look at, selectively look at mid and small caps?
I personally think there is a reasonable equilibrium between the three markets. I wouldn't be able to say this when this calendar year started, but I think that
Hmm.
there's almost no positive bias to either of these segments. If I have to be a little more positive, then it would be to the mid-cap segment. Mid-cap, by which I mean there's several mid-cap indices. To simplify life, we look at Nifty Midcap 150, which is what is the Bible for fund managers. So that has an earning potential of almost about 22% for the subsequent financial year as well. So I personally think that Nifty Midcap 150, if you ask me one out of these three, I would certainly say Midcap, but there's a reasonable amount of equilibrium on all these segments.
Right. Okay. And what about the pockets, the themes to look at now? Which are the couple of themes that would drive, gains going forward? And, if investors are looking to, kind of rotate out of certain pockets and get into certain pockets. And how should one really rebalance portfolio now? Now, would you look at autos, consumer durables, consumption? Is that the theme to be in?
See, I think if I have to play a structure of about 2 3 years kind of Nifty outperformance, I've been betting on IT. Of course, every time I bet on IT, it goes down a couple of more percent. But I think that's where the reversal is possible. So it'll be a contrarian bet. But I think auto has had about degrowth in terms of earnings last year. I think this year it has done the last quarter. Nifty Auto has delivered plus 2.6%. I think the earnings revival will happen on the Nifty Auto bit. And Nifty Auto and Nifty IT have the potential to beat Nifty by about 5% compounded over the next 3 years. That's what one investor should look at. Now, coming back to what are the themes I've been pointing out, Nifty capital markets, which is, I think, the theme where there is under penetration of the capital market infrastructure in Nifty. For example, Nifty has zero capital market stocks in it. I think a country, if it's trying to play an economy, I personally think if you're bullish on India, I think you have to be bullish on capital markets, and capital markets is completely underrepresented in the Indian capital markets. Ironically, sounds like an oxymoron, but that's the fact. So I would bet on those 15 stocks which are called the Motilal Oswal Nifty Capital Market Index. And I think that there are some heavyweights there. If some more capital market stock get listed, you will have a broader theme to play. I, of course, I have to give my
Hmm.
disclaimer that Anand Rathi Wealth Limited, which is the company I work for, is also a part of that index with about 3%
Hmm.
weight.
So, capital market theme as it is a broad theme, right? So, there's exchange, there's depository, there's AMCs. Would you play it through AMCs, given the fact that we've seen a very good bump up in equity inflows and SIPs at record flows? Which are the pockets that are still, under, in fact, there are a little undervalued within the capital market theme?
See, I think within the capital markets, there is a distribution business or the delivery business, B2C businesses. There are B2B businesses like the asset management companies. There is also infrastructure, financial services infrastructure. These, if you break them down, and then you have the exchanges, which is also part of infrastructure. But I think if you ask me, where would I be more specifically bullish? I think I'm actually bullish on the entire value chain. Because if an asset management company gets more business, there's also a distributor making more commission. They're very closely intertwined. If you ask me to choose one, I'll say the financial services infrastructure business would be a subsector to play in that sector which we're speaking about.
Sure. There's another pocket that has seen renewed buying interest, and that's the entire new age basket, right? We saw numbers also pretty good for Paytm and Nykaa, etc. And recently Swiggy has increased the platform fee as well, and that comes ahead of the festive season. And of course, chances are that rivals like Eternal will follow suit. Uh, any thoughts on the entire new age pocket? Is it a good time to look at some of these names, given the fact that most of them are on profitability path as well, as in they have already turned profitable?
Yes. So I personally look at these new age businesses, which I've just got into profits very differently because I tested an hypothesis. What end up happening in these businesses is if you're buying these businesses, fundamentals is not what I'm looking at. What has actually happened is these big businesses have got into indices, first step. When they get into indices, a lot of money comes in. If, like you mentioned, a couple of stocks which actually have gone into Nifty as well. If a stock gets into Nifty with about a 2% weight, what happens is there's about 8 lakh crores in Nifty index funds. So you have almost 16,000 crores chasing that stock. Once that happens, I'm just explaining to you what the cycle is, how it's a self-fulfilling prophecy. So point one, these big businesses, when they get listed, exchanges review their indices constituents, they come into index, there's a lot of passive fund buying. Then the trader jumps in because he sees all the resistance is broken, flag patterns and all that. And then the trader comes in. Once the trader comes in, the investor says, oh my God, have I missed out something? Then the research reports are written in retrospect, justifying those astronomical valuations, which are in hundreds of P. This is the exact cycle in which these businesses are. If you want to play these businesses, you don't get too attached to the fundamentals because these businesses have turned positive. Also, in terms of profits, they've also gone back into negative. So, if you don't understand the demand and supply of passive and the trader, being an investor in these is, I think, chasing your own tail kind of business. I would say new age businesses are more supply and demand driven with these three pockets of individual mutually exclusive characteristics of these owners who actually come one at a time and take the business where it has actually gone in terms of valuation. So don't be too possessive about the fundamentals. I don't believe those fundamentals, even if a report is written which justifies those fundamentals. That's retrospective thinking to my mind rather than prospective.
All right, that was a very comprehensive explanation and a good one at that, Firoz. But how would you be looking at some of these banking names now? Within the BFSI space, would you tilt more towards insurance and NBFCs, or would you look at banks? Because of course, we've seen a 100 basis point rate cut by the RBI in the last 1 year. Margins were a concern, and that's what we saw in the quarter gone by as well. So tactically, what should be the play when it comes to BFSI?
You see, BFSI, if you're doing medium term, then you can get into insurance and NBFCs and stuff. But if you're looking at long term, I would say the conventional private sector banks are one of the least valuations from where they poised. Of course, we've had 2 years of very difficult times for a bank when repo rates were not touched at all, and RBI tested everyone's patience after June 22. We had an upward rate cycle, and we've got some relief in February. But I think banking is something which I would definitely vouch for from a 2 to 3 year perspective. Private sector banks, not even PSU banks, but I would say if you're playing the short term, I think banks will still disappoint you for a couple of more quarters.
Okay, banks will disappoint perhaps in the short term. But lastly, Firoz, what do you see as a risk now at this juncture? There was chatter that your reforms push had slowed down, and of course that was laid to rest by the PM himself. Anything that would look as a serious threat now, because tariff flip-flops are happening, negotiations are on, although the 25th August talks have been postponed, so we are staring at a 50% tariff starting from the 27th of August. But how big a risk is that? Do you think the market has taken that in its stride? Because 50%, give or take, may not stay, right? Because that won't be beneficial for US as well. So here on, any big threats or risks that you see aside of tariffs for the market?
Yes, of course, I see one risk, which is a structural risk. How would Fed roll down its balance sheet? That's
Hmm.
what is going to impact the emerging market flows from index funds as well. Today, FIIs, the discretionary FIIs have sold, the prop FIIs have sold partially, the index fund FIIs have bought over the last 2 3 years. So one risk which I see is the Fed reducing its balance sheet. If it actually it can't do QE tapering, QT, point one. And point two is if they hold their current balance sheet for 6.5 years, also their balance sheet size reduces to half because that's the modified duration the Fed is running in its balance sheet. So I would be very keen to see 1.5 years, how is Fed trying to manage the balance between inflation, interest rates, and their balance sheet target of coming down. So I think that's where the large structural risk lies to all emerging markets. And I don't see tariff as a risk at all. And that's what I've been stating. If Trump tried his best to create some degree of panic in Indian capital markets, he couldn't do it. 2 3% move down. He was expecting a 10% gap down with these statements to put pressure on us, but that didn't work because FIs have already sold. We've seen about 5 lakh crores of outflow. The Indian domestic guys have bought in about 15 lakh crores over the last 4 financial years. And in my opinion, in the next 8 years, you will see 50 lakh crores of inflow from domestic institutions. So index fund investors of FIs will keep buying. So coming back to the point you made, what are the risks? The whole inflation, interest rate, and balance sheet balance is the one thing. If that goes wrong, there is going to be some more outflows from the emerging markets, and that's the risk I see, which can put pressure on most of these markets over the next 1 2 years.
All right, that's the view then. Of course, Trump, of course, tried his best to create panic in the Indian market. Good point there, Firoz. Of course, he wasn't able to do that. And of course, we've had the government, of course, announcing the reforms rush in terms of GST rationalization that the market, that comes as music to the ears for the market as well. But with that, Firoz, always a pleasure chatting with you. And hopefully, we'll be chatting again soon. But wish you a great day and a great week ahead as well.
Likewise, have a wonderful day.
Thank you.